Welcome to the deep dive. Today, we're tackling something absolutely critical in trading.
Oh, yeah. What's that?
Knowing when to get out.
Yeah.
Exiting a trade, it's a make or break, right?
Absolutely. Knowing when to take profits, or maybe more importantly, when to cut your losses.
Exactly. So we've dug into Mansi Suryawanshi's work on this, the goal, to find those technical signals, those setups.
The clues the market gives you.
Right. The clues that tell you, okay, maybe it's time. We want to give you a shortcut to, well, smarter exit decisions.
Sounds good. It's all about reading that market energy, spotting when a trend might be losing steam or even turning around completely.
Okay, so Mansi mentions reversal patterns first. Things like head and shoulders, double tops, that kind of thing. How do those signal an exit?
Well, think of them like a picture of a fight between the buyers and sellers.
Okay.
And when a really key level, like the neckline and head and shoulders, when that breaks, and you see volume pick up.
Volume again.
Yeah, volume's crucial. It's like, okay, one side just won decisively. The direction's probably changing. Time to think about getting out if you're on the wrong side of that.
Got it. So it's the pattern plus that confirmation.
Mm.
What about candlesticks? Like engulfing patterns or doji?
Those are great too, especially when they pop up right at those important support or resistance zones we just talked about.
Okay.
They can be an earlier warning sign, A candlestick pattern like that shows a shift in momentum happening right at a critical price point. It's a heads up.
Makes sense. So, moving on. Breaking those key support or resistance levels themselves, that sounds like a pretty clear signal.
It often is. If you're in a long trade and a major support level just gives way, or if you're short and resistance breaks upwards, it suggests the forces holding that price back are, well, gone.
But you need confirmation.
Definitely. You want to see the price actually close beyond that level, ideally with more volume than usual. That adds weight.
Okay. And you mentioned moving averages earlier, specifically the death cross. That sounds ominous.
Yeah, it does. It's when the shorter-term average, usually the 50-day, crosses below the longer-term 200-day.
And why is that an exit signal for longs?
Because the 50-day shows recent momentum, and the 200 shows the bigger trend. When the short-term tanks below the long-term, it's often a sign the overall sentiment is shifting, turning bearish.
Right, a major trend change, potentially. Okay, so we've got reversals, broken levels. What about just a trend losing its punch, not reversing it, but weakening?
Good question. That's where momentum indicators are really useful, like the RSI Relative Strength Index.
Divergence. Right?
Exactly. Bearish divergence is key. Price keeps making new highs, maybe just barely, but the RSI peak is lower than its last peak. It's like the buying pressure is getting tired,
Okay, so it's a warning sign.
A big one.
Yeah.
And if the RSI then drops out of that overbought zone, say below 70, it confirms a weakness. Might be time to go.
And indicators like MCD or stochastics. Similar idea.
Pretty much. With MACD, you might see the MACD line cross below its signal line, or the histogram bars getting smaller. That shows fading momentum.
Right.
And the stochastic oscillator, if it's been way up in overbought territory and then crosses down and out of it, that's another potential signal the upward move is exhausted.
Let's talk volatility.
Yep.
Bollinger Bands. How can widening bands signal an exit? Seems counterintuitive.
Well, after a nice trend, if the bands suddenly start widening out, it can mean uncertainty is creeping in. Volatility is waking up.
Right.
If the price then pushes out and touches or breaks one of those outer bands, especially if other signals agree, it could mean the move is overextended. Maybe time to exit before it snaps back or just goes sideways.
And those crazy fast, almost vertical moves, parabolic ones.
Yeah, those often burn out spectacularly. They're usually unsustainable. If you see price stall or reverse after a move like that, particularly on high volume,
Get out.
probably a good idea. Same with climactic volume. A huge volume spike on a big price move can often mark the end or near the end of a trend. Exhaustion.
What about simple trend lines or channels? Breaking those.
Classic exit signal. If you've drawn a nice uptrend line and price breaks decisively below it with confirmation, the trend might be over.
And channels.
Similar logic. Breaking below the lower line of an ascending channel could be an exit for a long. Breaking above the top line of a descending channel for a short. Again, volume helps confirm.
Okay, we absolutely have to mention stop losses. Different types.
Right. Crucial. You've got trailing stops, which move up with your profit.
Locking it in.
Exactly. They trigger an exit if price pulls back a certain amount. Then there are fixed stops, just a set price level where you say, okay, I'm out, I was wrong.
And time stops.
Yeah, if a trade just isn't doing anything, just sitting there. A time stop gets you out so your capital isn't tied up dead money.
Quickly, any other indicators? ADX, Fibonacci, Ichimoku.
Sure. If the ADX, which measures trend strength, falls below, say, 20 after being high, it signals the trend is fading. Price getting rejected hard at a key Fibonacci retracement level can be an exit, and price breaking back inside or through the Ichimoku cloud often signals a trend change too.
And of course, hitting your profit target based on risk reward.
Absolutely. Or if the whole reason you entered the trade just falls apart, maybe some news comes out, or the market structure shifts completely, got to be ready to exit then too.
Okay, lots of signals there. Any final practical tips?
Yeah, don't rely on just one signal. Look for confluence, multiple signals pointing the same way.
Makes sense. Higher confidence.
Right. And remember, signals work differently on different time frames. Backtest your exit strategies, see what actually works, and please always use stop losses. Monitor volatility too. Maybe adjust your stops if things get crazy.
Mansi's example really tied it together. Exit along if price fails at resistance, forms a bearish candle, and you see RSI divergence plus volume confirms.
Yeah, combo.
Exactly that. It's about building a case for the exit. This has been incredibly useful. It really hammers home that your exit strategy is, well, just as vital as your entry point. Maybe even more so sometimes.
Couldn't agree more. Get your exits right, manage that risk, and your trading results should improve.
So here's a final thought for you to chew on. Imagine consistently applying just one or two of these exit signals, really mastering them with discipline. How could that truly transform your trading outcomes? Think about it. We'll catch you on the next deep dive.